Ed brings this thing here where he's got a little acronym.
Okay.
And if you don't have one, that's why I need to start with him.
Start with him, I'll think about it.
The only things that can derail a bull market are RSVP.
Ooh, I like that.
Which stands for recession, shocks, valuations, and policy mistakes.
See, you got anything like that?
I like that.
It's not a cursive. It's a you did it in RSVP.
Yeah.
And your basic thrust, Ed, is that 3 of them are off the table because the Fed probably on hold. Valuations are not cheap, but not not at 28 times earnings or something. The shock, it can happen at any time, but a recession is something that is possible but not likely in your view.
Yeah, I mean, eventually, obviously, we'll have another recession, but we don't think, and the consensus isn't that it's going to be any time real soon. So, of course, we'll be looking at the GDP report today, and some of the data has been mixed recently. So we had that bad retail sales number, but that really doesn't seem consistent with the rest of the information that we have. So far, I think most of us think that the economy is going to continue to grow at a slower pace, granted, and the global economy is also growing at a slower pace. But I don't think there's a recession on the horizon, and that'll be the next big market event.
And I also, we've talked recently. You felt a little negative going into December, I think, is at least the way you explained it to me, and you bought in December at the lows. But you seem to be saying now the gains are in for 2019. You don't have a year-end target for the S&P. You don't do that.
No, if we did, we'd already be past it.
That's what I mean.
So I think.
So you're at least negative, or
I wouldn't say that. We're still overweight stocks in our portfolio, but not by a lot. So I think the gains we can expect between now and the end of the year will be pretty limited.
Are you like a 2750 2019 target guy? Because there's a lot of them that got there. They got so shaken out. Their weak hands were so shaken out by December that their 2900 target for 2018 became a 2750 for 2019.
If we can get to the old highs by the end of the year, I would be delighted. I don't think it's likely, but it's possible. And I think what's happened is...
Remember you said that.
Well,
because we're in a really sharp surge right now, one of the best in January and February that we've ever had.
I think it actually
you say it's just going to stop.
I think it may be useful to look back a little further. So right now, the S&P is almost identical to the level it was in the middle of January 2018. So yeah, there's been a tremendous amount of ups and downs, but the overall level of the stock market is basically unchanged over the last 13 months. So I think we should expect to continue to get continued volatility. Again, I think the market will work its way higher, but I don't think we're going to see a big surge between now and the end.
All right, Gabriela, and I guess that you may think that Ed's onto something here, because you have pointed out that earnings are decelerating. So the gains we've seen have been basically multiple expansion, which may have been brought about by a Fed switching tack. Is that where you are?
That's right. And I think, the actual multiple has followed a bit the trajectory of the market over the past few months, right? So we had a collapse in the multiple in the fourth quarter of last year. Stocks all of a sudden became extremely cheap. And now this year we've had a return of the multiple to average levels, right? But it's true. The entire gain this year has been driven by that turnaround in the multiple. So going forward, what concerns me a little bit is that the actual underlying earnings expectations have continued to deteriorate here in the United States as well as abroad. So it has been a sentiment-driven rally and not quite a fundamental-driven rally. So I think to get to some higher levels here, we need to see a turnaround in that fundamental picture, and it has got to come from better global growth, which we have yet to see.
I don't see, I don't know what would suddenly make that a more positive outlook for just this year, do you? I think we still got Brexit, we still got, trade issues, we still got Italy, we still got all these things, nothing has been fixed.
And all those issues fit together in this bucket of policy uncertainty, which is exactly what's been driving the weakness globally. It's fed through lower business sentiment, lower capex, and lower export orders. So unless we see a big turnaround here in that policy uncertainty, it's unlikely to see a big boost.
Caruso-Cabrera, did you want to, you're so negative on the, I mean, you just think the market's been wrong for like years, right? Do you want to just say that the market just is awful and it's going down?
No, my role here was to talk about the impact of the summit, and you can see from the markets that it's not much.
You know what? I wasn't going to point it out either, but but the market's reaction yesterday and today, it doesn't necessarily look like there's a constitutional crisis on the horizon either, at least not yet.
Nope, not yet.